I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Guilhem Chaumont, CEO of Flowdesk. Guilhem, welcome to the show, and thank you for taking the time today.
Thank you so much for having me.
You're very welcome. Let's dive into the world of market making, liquidity provision, and just the growing DeFi aspect and institutional adoption and hopefully more mainstream adoption of cryptocurrencies. I know your team is deep in it. I would love to start off our conversation by just hearing a little bit of your background in crypto and how you got to starting Flowdesk, and then we'll dive into everything Flowdesk.
Yes, sure. So yeah, thank you again for the opportunity. So my name is Guilhem Chaumont. I'm 31 years old. As you can tell from my accent, maybe I'm based in Paris, France. I'm the CEO and co-founder of Flowdesk. I have more a scientific engineering background, and I started my career in rates derivatives trading. That was back in 2017, 2018. And right after, I dived into an entrepreneurial journey in crypto, which led me to create Flowdesk slightly more than 2 years ago.
Mm-hmm. Amazing. And a lot has happened since you joined. You know, it's full speed ahead, and I'm guessing your team is keeping up with it. Maybe you could start with an elevator pitch of, you know, what is Flowdesk working on in the space, and how have your team handled it so far?
Yes, sure. So yeah, as I mentioned, you know, Flowdesk was created back in June 2020, so it's been slightly more than 2 years. We are basically creating an all-in-one platform for token issuers to address their various financial needs through connectivity to the multiple, you know, trading venues, custodian, so on and so forth. And the first product we started with was market making as a service, which is, you know, a radically different approach to maintaining liquidity across the set of exchanges. It's, you know, very different from the historical model that has been running both in traditional finance and in crypto, which is based off proprietary trading firm ensuring the liquidity. With that approach, you know, we are trying to give more power, more control back to the token issuers, essentially in just, you know, providing them both the technology and the team of traders worldwide, and they provide the connectivity to the exchanges and the capital. And what is interesting with this model is that we work with them, for them, and not necessarily against them, like it can be done, you know, in a less healthy, you know, approach where the market maker is heavily incentivized, you know, to just generate profits. With this model, we are basically just retainer based. The projects provide the capital, they take all the risk, but they also, you know, capture all the potential P&L from the activities. And what is interesting is that, on the contrary of, you know, proprietary trading, market making approach, they can adjust their trading parameters the way they want to. So if they want more liquidity on a certain exchange, if they want a tighter spread on a certain exchange, they can of course do it with that approach. And of course that comes with working with a technology firm like Flowdesk, which is fully regulated, trading worldwide. We are now 60 people between Paris and Singapore, opening offices in the US shortly. So yeah, that's kind of, you know, the approach we're trying to bring to the space, both being regulated, offering a high level of transparency, you know exactly the trades that you do, you know exactly the liquidity market share you have in the books, and all that comes in the suite of multiple products, because now we are launching custody, brokerage, and treasury management services.
Okay, great to know, and thank you for that intro. Now, obviously, for everyday trader, if you're trying to trade a coin, liquidity is key, because if there's no liquidity, you know, if you try to sell, it's gonna drop 10% of the price, and there's not a big order book. So obviously you're helping with that as well. But from what I understand in Web3, there's a difference in trading on a centralized exchange like Binance, and using something like Uniswap, where there's decentralized and people can add into the liquidity provision. Does Flowdesk work on both of those aspects, with decentralized and centralized, or where is the focus at?
Yeah, of course we do. And, you know, in this world where it's definitely a combination of CeFi and DeFi, there is no other choice to operate on both, and you can just not forget either one of these. So to give you some metrics and examples, we cover slightly more than 80 centralized exchanges as of today. Wow. And we cover most of the DEXs, of course, obviously all the Ethereum compatible ones. We cover about 25 DEXs, and we execute a few million orders there on behalf of our clients on a daily basis.
Wow, that's great to hear. And some of these coins that come. So the coin will approach you and they're using their own capital, but you manage. So how does that work where you actually manage the liquidity with their capital?
Yeah, basically, you know, there are two approaches. On centralized exchanges, they will create the accounts on the exchanges and they will fund the accounts. It's their own accounts, so they always are in control. If they want to cut the trading, they can do it virtually instantly. They provide the capital on the exchange, they provide us the API keys, and we just connect our technology. We can basically bootstrap any market making feed on any exchange in a matter of minutes with the tech that we have created. And the other approach that we have is they give us directly the funds and we put them in sub-accounts that we have, or we keep these funds in custody, notably when it comes to DEX trading, where we need to operate these funds directly through our infrastructure. And right now we are, you know, obviously working on new initiatives which would be more and more non-custodial, where basically, you know, the token issuers put some money in a smart contract, they give us a mandate to operate on it, and anytime they want, you know, to just withdraw the funds, obviously they can do it. Obviously they lose, you know, the market making, but at least, you know, it's giving them again more and more control. I think this is what Web3 is bringing to the table, and that's definitely what we want to push.
Very cool. And does your team work with, you know, the largest coins, like on the first page of CoinGecko and CoinMarketCap, and also just coins that are just launching, like you're helping them launch the coin as well, as sort of from the beginning, and is a variety, or where do you lay on that spectrum?
Yeah, historically we've been working, you know, with more of the smaller coins. We were definitely, you know, having these like liquidity issues, and even, you know, some of the market makers could not even work with them because they could not assess, you know, the value of the coin. We've had a really good traction over the last 2 years, which led us basically to work with now any type of coin from $1 million market cap to a few billion. So actually, you mentioned, you know, top of CoinGecko, I think we have maybe 6 or 7 clients in the top 100 of CoinMarketCap, more or less. So yeah, we work now with a much wider range of token issuers. Obviously, market making as a service is particularly relevant for the new projects who want to try to bootstrap liquidity very quickly and very efficiently in the early days of the project. But as it turns out, you know, even the bigger projects require liquidity. Liquidity is always another matter of magnitude. You know, 10,000 BTC obviously is a huge amount, and that impacts, you know, the price of Bitcoin. But maybe 10,000 BTC equivalent on some smaller coin will be just a few $1,000s. So it's always a matter of perspective and the type of investors you're trying to get into the project.
Definitely. And I saw throughout the summer that your team recently raised a $30 million fundraising round. That's incredible. So first of all, congratulations on that. And second, you know, with that closed, what are the expansion steps and how will that capital be used to grow Flowdesk?
Thank you very much for the question. You know, for us, it was kind of a natural path to raise money at some point. We've been bootstrapping the company for a while, and we really had a good traction. So it was just, you know, a natural way to raise capital and start scaling our activities even faster, because obviously market making, whether it's as a service or not, and with the ambition that we have, is something extremely complex, because we're talking about, you know, running 24/7, 365 days a year activities, and obviously there is no single room for mistake like there can be in other tech companies. So that means that we have this barrier that we need basically to breach, where we need to have this global team that we are building right now, which will ensure, you know, the global trading, sales, regulatory coverage on a daily basis, and also of course build the tech, because we are a technology firm before everything, not a prop trading firm which would be, you know, trading off its balance sheet. We are building a platform that is very ambitious and that we have already delivered to most of the clients, where they can track, you know, all various type of analytics. They can view their assets, they can have it valued in real time, and so on and so forth, and that kind of things. So obviously the ambition was really, you know, to switch from a team of 10, 15 people 1 year ago to, you know, this global team that would both operate the algo on behalf of the clients, but also build them as well as the platform. So to summarize, you know, we've been quite lucky, you know, to have this terrific set of investors joining the journey. And yeah, the ambition is multiple: scaling the team, building the product. You know, it's always the same story, and the bear market is actually perfect to do that.
Definitely. And yeah, it's crazy in the cryptocurrency trading that, you know, there's no stock market close like in the regular markets, and you sort of need to have that software running 24/7, and it needs to have about the same uptime as Bitcoin, which is 99.9999%. Otherwise, the trading stops, and that's a huge error for your team. So that's great to hear that you're expanding. And you mentioned that you're based in Paris yourself, and you're working on Singapore offices and expanding out. I'm curious on your take, being in France, on, you know, the EU as a crypto hub, and how you're seeing expansion of these kind of operations that you're doing in the local area there.
Yeah, it's an interesting question, because, you know, when we created the company 2 years ago, there was definitely the question on the table, you know, for us based in France, do we want to do this in Paris, or do we try to find, you know, for an easier place to locate? And obviously, with the ambition of the company that was really centered, you know, on compliance, transparency, regulation, we made the bet at that time, considering, of course, the momentum that there was already from the regulator to do this in the cleanest manner as possible and to be based in Paris. And few months after we got registered with the regulator, actually we were the first crypto trading desk to be registered. And I think since then, I mean, it's easy to say this now, given the recent news recently, but the momentum in Europe has been, you know, terrific, particularly in Paris, which is I think becoming, you know, the main hub for crypto in Europe, with many exchanges, you know, sitting at their offices. We have obviously the MiCA regulation, which is inspired to what the French regulators did to some extent, which is also, I think, going in the right direction. It brings a new set of challenges, which is incredibly big, but I think this is what crypto needs, you know, to hit mainstream eventually. So for me, it sounds definitely like, you know, Europe is playing the right card in this game. Obviously, it's difficult, but on the long path, I see, you know, crypto being as decentralized from a geographical perspective as it is in practice. And Europe, China, Asia in general, the US, nobody will be left on the side, in my opinion. But yeah, what Europe is doing right now is very, very reassuring, in my opinion.
That's great to hear, and it really is sort of a you know, a battle of will you innovate or die? You know, with the regulators, they have to work with teams like you that are bringing these innovative products into new markets, because otherwise your team will move somewhere else and continue to do it. You know, you're not just going to stop if the French regulators say no. You just move somewhere else, and they sort of lose that business. And I felt that with Singapore, you know, back in 2017 and earlier. They seem to be very innovative, and Southeast Asia overall is like really taking a step forward. And I think that it only helps the country, you know, if they work with teams like Flowdesk to find a solution and make sure that everything is, you know, although there's a new product and you sort of have to make new regulations and ensure everything's working. I think obviously that's the right way to go about it, and it's reassuring to hear that they're working with you guys.
Yeah, thank you. We will see, but it is true that we have a very clear line of communication with the regulator. The regulators are clearly, you know, not being, you know, a blocker for all the initiatives, and they are quite supportive. Obviously, when it comes to innovation, it's about taking risk, and sometimes you want to take bigger risks than the regulators will allow you to do. But they are clearly aware that, you know, innovation will not come without, you know, having a framework that make people, you know, easy to work with. And obviously, already today we have some blockers where we cannot do anything. We cannot do everything. Sorry, but this is what we need to do, I think. You know, I mean, I think they are conscious that all the regulations that has been set in the last 20 years on the traditional finance is probably too heavy to some extent. So, you know, we're not trying to reinvent the wheel here, but more trying, you know, to take the best of what was in the traditional world. What you see, for instance, on the stablecoins front, where it's proposed by MiCA, I think is extremely interesting. And yeah, that will take years, obviously, to build. But it's also interesting, you know, to see that in front of them, they have, particularly in Europe, you know, these new firms. Some of them are unicorns, which are, you know, already extremely well sophisticated, who have the right balance, you know, in terms of being innovative versus being heavily regulated. You know, we are here to push this all in the right direction. and not necessarily, trying to defend, or small gray area zone of comfort. So I think it's quite reassuring. It will take years, but I think it's quite reassuring globally.
And speaking of regulation and risk, obviously the frameworks are put in place to help protect people's capital and their information as well. And looking back at this October 2022, there was a lot of DeFi hacks and exploits. It's almost setting a record for the most money siphoned out of smart contracts in DeFi, and part of that can do with the liquidity provision on decentralized exchanges as well. If the smart contracts aren't up to date or there's some kind of flaw, a lot of money can be siphoned out. How does Flowdesk play a role in, maybe you were helping build the liquidity on some DeFi protocols that got hacked? How do you ensure that you're protecting the client's digital assets in that aspect?
It's an excellent point. Actually, there is this logical thinking that crypto DeFi will be more and more secure over the years as it matures, but we can see in practice that it's far from being the case. And the reason is simple. It's because we are still in the very infancy stage. I mean, there is new things coming every month, and just like internet was probably not secured back in 1998 or whatever. It took years and years. Even today on the internet, you see still a good amount of hacks when it comes to data and so on and so forth. So I think we are really far away, from having a completely secured crypto world, and it will take decades for sure. So Flowdesk role, in this is extremely important. It's about, first of all, it's about identifying the protocols that are safer than others. As part of our treasury management line of services, there is a high amount of protocols that we don't work with. We're talking about stablecoins earlier. Stablecoins that are not backed one-to-one, as the Europe regulation, by the way, recommends it in its future MiCA regulation. We don't touch it for the clients. Protocols where we cannot guarantee the AML, the AML checking that the transactions are good. We use KYT to check the source of funds, whether it's clean or not. We don't go in it for our clients. Basically, it's about protecting our clients before everything. The second point, it all comes down to market making as a service. The product we are building, it's about splitting the responsibilities. When it comes to market making, you were historically relying on just a single person, a single provider, which both has the technology and the liquidity, and they manage it, effectively or not. With Flowdesk, it's about splitting the two, splitting the tech and the liquidity, meaning that if tomorrow Flowdesk, for instance, would be hacked on its operations, which are still today very heavily centralized, there is no magic, the funds would be still quite protected, because we won't go into the technical details, but the funds are still stored on exchanges or on custody solutions, which are very, very reputable. Flowdesk is Fireblocks and Ledger, for instance. And that's about splitting the responsibilities, making basically Web 2 and trading infrastructure as decentralized as Web 3 can be. It's as simple as that, in my opinion. And of course, once you've said this, it's not just saying it. In finance, you cannot tell the people, trust me, I'm a nice person. It's about proving it through regulation. That's why once you've set up all these good practices that we believe we have done, it's about being regulated and getting the stamp, from the regulator, certification, or group of auditors or whatever, to make sure that you can prove to your clients that you are doing the best practices in the market.
Yeah, and that's definitely reassuring for the clients. Now, let's look 3 years ahead. Say we're likely moving into the next Bitcoin bull cycle and all the coins, and I'm sure there will be a huge opportunity for getting more market making, more liquidity for some of these lower cap coins as well. What is going to be the key to a lot of these new coins coming out, and say the coins that are on in the top 100, for them to choose Flowdesk for their market making solutions? You mentioned the best practices. You mentioned having 100% uptime and expanding and making sure that you have service. Are those things going to be enough to be the go-to solution for this, or what else do you think will make you guys be the number one?
I think it's Web3 is bringing a new wave of innovation, but you know, when it comes to working with counterparties, centralized or decentralized, it's always the same rule. It's about having an efficient product, a competitive product, and having trust in the product. What we are currently building and already delivered on the efficiency side is a global trading infrastructure that gives connectivity to all exchanges. Already 2 years, you know, on the way, we cover 90% plus of the exchanges by volume, centralized and decentralized. It's about being competitive. What we prove already today is that market making as a service is a much more competitive approach than going through a market maker with the call option model. The savings for projects is anywhere between 10x to 20x in terms of cost, and the math behind it are quite simple. And as you know, the market matures, the token issuers are also maturing from a financial perspective and also trying to understand, you know, what is the real cost of liquidity. And the more they go down the rabbit hole, the more, you know, they have less and less, you know, appetite for giving away 1%, 2%, 5% of their supply to an entity that they don't control. And last point, it's about the transparency, as I said earlier. Transparency comes down in two things: giving the right tools to the clients, to the token issuers, so that they can see real time exactly what you do. What is the liquidity that the market maker is putting in the book? What is the trading volume that the market maker is doing for me? What is the P&L or not that the market maker is generating for me? And once you have this tool, just as I was saying earlier, even that is not enough. It's about knowing that if the market maker or the technology provider do something wrong, there can be an impact from a regulatory perspective. So it's also about, you know, being regulated. And all that equation, which is obviously is extremely complex, which justified our recent fundraise, is something that we are currently solving and that we hope will be fully solved for the next bull run. And the next bull run is going to be quite exciting. I think, just like you said it, we are probably 2 years, 3 years away from it. So there is still a lot to build. But I have little doubt that, you know, we will be there with great ambitions.
It's great to hear, Guilhem. And for viewers that want to learn more about Flowdesk and look into the details, what's the best way for them to learn more?
So, you know, we've been always, you know, quite secretive, historically speaking, because, you know, we are a technology-driven firm. I mean, we are a team of technologists before everything, and we have lots of, you know, a background, you know, coming from algorithmic finance, trading, you know, regular banking. So we always had, you know, this secretive approach to always protecting the best interest of our token issuers. This being said, obviously, you know, with the recent fundraise, we are more and more coming out and more building our presence, but always, you know, with the spirit of humility, in the sense that it's very early in crypto. It's very, very, very early in crypto, and we are all building this together with the token issuers. The easiest way to contact us, there are several possibilities. Obviously, right now we have coverage on all global events, all global physical events, you know, throughout the world. So we always have someone, you know, who is there, and we are always so excited to discuss, you know, about the new projects. You know, even, I mean, we are Web3, you know, crypto native before anything. So we love, you know, I love talking to projects, discovering the new layer twos, you know, the new DEXs, which are based on order books, or, you know, new interesting approaches. So yeah, always talking on event is great, and otherwise we have our website, where obviously we can be contacted quite easily. And yeah, we look really forward, you know, to hearing what people are trying to build and how we can help them, and trying to solve this together.
Sounds great, Guilhem. Thank you so much for taking the time and for your valuable insights into the EU, market making, and Web3. I really appreciate it. I'm looking forward to the growth of Flowdesk, and let's follow up in the near future.
Thank you so much for the invitation.